Friday, February 7th, 2020, Maneco 64, home of alternative economics and contrarian views. So it's interesting, the job data came out earlier today. Before the data came out, I made my daily video. The title was The Cosmetically Enhanced Economic Recovery. I said that the recovery is fake, economic recovery, a lot of it is fake. Yes, the economy has improved somewhat, but not as much as we've been told. And this happens with any administration, be it Democrat or Republican. I'm not partisan here. I'm neutral. If you look back to 1980, 1981, the national debt was just under $1 trillion. And it doesn't matter if you have a red or blue president, Democrat or Republican, the debt keeps going up. We're now over 23 trillion. There's another 21 trillion missing as well, according to Dr. Mark Skidmore. So we got the jobs data, and there's an interesting saying. It was popularized in the US by Mark Twain, and it goes like this. There are three kinds of lies: lies, damned lies, and statistics. So we got the job data out. They were great numbers, or at least better than expected. The headline numbers, the numbers that the market sees. The non-farm payroll number came out at 225,000. Consensus was 160,000. So it was great. But why hasn't the market rallied? So as I speak here, it's 4:25 p.m. London time, so 11:25 Eastern time, and the stock market is down 164 points. We've been down a lot more, a lot over 200 points. So what's going on? Well, I was going through Zero Hedge, and they published a really good article about why the markets are reacting as they are. We've even seen the Treasury market, bond yields drop quite sharply here this afternoon, which also doesn't make too much sense. So we've got the 10-year yield now down 6 basis points, just below 159. And it makes you wonder whether anyone's going to ask public officials, people in the administration or at the Federal Reserve about what Zero Hedge is talking about. I bet you the headlines are all going to be great economy, jobs increased by 225,000. Stock market drops, maybe because profit taking from the last few days. And we don't even know. It could actually be up 300 points at the end of the day. The market is so crazy. So let's go through this article from Zero Hedge. Payrolls revisions wipe out 520,000 jobs gains under Trump. So I guess the Bureau of Labor Statistics conjured up 500,000 jobs out of thin air. I guess if you can conjure up trillions out of thin air like the Federal Reserve, why not jobs, right? So let's go through the article. As we pointed out overnight, that's Zero Hedge, the big story in today's jobs report would not be the January payrolls increase, which, as we observed earlier, was impressive, surging by 225,000, well above the 165,000 consensus forecast. But the historical revisions to payrolls data, which would be reduced by as much as 500,000 jobs as a result of the BLS's recalibration of its birth-death adjustment. That's their birth-death model that they use to calculate this number. I told you it's a survey, and it's not like it's a hypothetical survey. That's what it is. Sure enough, the reason why the market is in a risk-off mood and why yields are tumbling again is because, as expected, the payrolls revision did indeed wipe out as many as 520,000 jobs in 2018 as of April 2019. So how many more revisions are we going to get? I wonder if the revision is going to come before November. Anyway, probably not. And the delta in December was a sizable and negative 422,000 with 152.383 million pre-revision jobs, contrasted to the 151.96 million post-revision. So they go on to talk about a chart they put on the article here. It says the chart below shows the change in monthly payrolls pre and post benchmark revision. And there are two things to note here. One, the bulk of the downward revisions took place during 2018, which means that the Fed launched its tightening cycle and was hiking rates based on false payrolls information, even as yields were sliding, with the bond market sniffing out the underlying misreported payrolls weakness. And two, the February 2019 payroll gain was revised to just 1,000 from 56,000. But it was still a positive 1,000, as a negative number would have broken the string of 112 consecutive positive monthly increase in payrolls. Yeah, we can't have a drop in payrolls, can we? So let's keep it at 1,000. The best way to visualize the substantial revision lower to payrolls is in the year-on-year jobs growth chart, which shows that instead of rising as much as 1.9% in late 2018, when the Fed was already set to reverse its monetary policy to dovish, jobs were in fact growing at a far slower pace annually. And after tumultuous 2018 and 2019 and pre and post series have now converged to roughly 1.4% annual growth. The other thing I would say, if the Fed was wrong in 2018 because the data was erroneous or didn't reflect the reality of the economy, is it possible that right now the Fed maybe should be cutting even more? Who knows? That they're behind the curve. Certainly the bond yields are saying this, with the 10-year yield approaching almost the record low we saw in the summer of 2016, around 1.34%. So that's another thing to consider. And again, to all those people out there who are pro-Trump or anti-Trump, I'm not either of those. First, I'm in the UK, so I'm non-partisan. Second, even in the UK, I don't care about politicians. I do follow what's going on, but I'm apolitical. I don't buy into this democracy stuff. I'd rather have economic freedom, small government, and the rule of law and free markets. So, but that's another subject. Anyway, let's finish. The biggest loser here is Trump, as the annual revisions took some of the shine off one of President Donald Trump's bragging points. As Bloomberg put it, cutting 2018's job gain to just 2.31 million from 2.68 million, while the increases in 2017 and 2019 were roughly unchanged at about 2.1 million, meaning that each year under Trump, while still strong, has been slightly lower than the 2.35 million increase in the final year of Barack Obama's presidency. I remember late last year, President Trump spoke at the Economic Club of New York, and I remember listening to his speech, and he actually mentioned the number that you can see on the US debt clock, US workforce. Right now it's at 159,006,348. And at that time I remember him saying that that number had just broken a record, highest number of people in the workforce. I guess now that has to be revised. So what he said back at the Economic Club I'm not saying he was lying, but he was using data that was not correct. That's why you have to sift through the data, and in this case, keep an eye on the revisions. They do this only once a year, so it will be interesting to see. I don't watch mainstream TV anymore, Bloomberg TV or CNBC. I used to watch it years ago, but it's probably interesting to see if they're going to be talking about this big revision. Whether they're going to say the markets are down and yields are down because of profit taking, who knows? Maybe you're watching it, and maybe you could tell me in the comment section below. Before I go, I'd like to say, for those of you who are into precious metals, and you know that I am into precious metals, I have a promo code for gold investments who do physical bullion dealing in the UK. But there's also an interesting a new card, well, newish card they've been running here in the UK for 2 years. It's called GlintPay. Basically, there's an app for GlintPay. You set up the app, open the account, and you can load your card with fiat dollars or pounds, and you can also buy gold, which they keep in your name in an allocated account in Switzerland, in a vault, and you can actually spend that gold with a MasterCard that they give to you as well. Yeah, you can lock the card to gold or to dollars or pounds and use any currency you want anywhere in the world. My referral code for GlintPay is MarioGlint79. So if you do decide to look at GlintPay, make sure you use that referral. If you enjoyed this video, please hit the like button. If you haven't subscribed to the channel yet, think about subscribing. Please share this video far and wide. And you can also follow me on Twitter, Facebook, BitChute, Steemit, and DTube. I wish you all a great rest of the day. Take care. Bye.